Adam here from ReadFX Trading. In this video, I just wanted to go through how you can combine structure, support and resistance and a pattern entry technique, and how you can put them together and create a great opportunity. The first video I did on here was actually about reading the market when it's in a mini trend, reading the ebbs and flows, structure, how price will move down, create a low or a new high, and then go back up to retest and then continue on its path. Now, I don't want to get into doing a review of what happened in the market. I'd rather give you an idea of stuff that I'm looking at and potential setups that may occur, so you can have time to analyze it yourselves, etc. But in this particular case, I thought it was a really good example of how the first video that I did, how you can use that, and second video I did on a couple of pattern setups, how you can use them together to create a great opportunity. So I'll start by reading the ebb and flows of the market. So let's start from up here. Market moves down, moves back up. Let's just stay in draw mode there. Okay, and the market moves back down, creates a new low. We pop back up. Where do we move back up to? We test the structure level that we just broke. Market moves down, moves back up. Where do we move back up to? The structure level that we just broke. The market moves down, creates a new low. Where do we move back up to? We move back up to test structure a little bit higher this time, but we do move back up to test the structure level there. However, this time, the market didn't want to move back down to test the low there. Instead, we moved up to test this high here, this swing high here. And in doing so, if I put my crosshair on there, we didn't close higher, but we made a new high with the wick here. We could still assume that we're in a bearish trend. So what we could be looking for is the market moved up to there. If we do it on the wicks, is the market going to move back down here? It didn't do that. We only made a 50% move back down. Then the market came back up to test that level. We didn't get a high, so the market's just moving sideways here, a little bit unsure what it wants to do perhaps. And we moved back down again. We didn't make a new low or even attempt to test this level here. So we could be looking at a rotation here, a bullish rotation. And then finally the market moves up, breaks this level, which is aligned with this level, and so on. If I just clear off all of that, knowing that we've put in a new high here, I'm going to put a horizontal line in on the structure levels. So we can clearly see we've already identified these levels where the market's held. So we've got those there. And now the market's broken up. What am I expecting? I'm expecting a move back down to test this level at some point. Don't know when I'm going to get it, but that's what I'm waiting for. I'm going to be patient and wait, because that's my opportunity to get into a trade. So at the same time as this is happening, I'm looking for reasons to get into a trade. So what was the market going to do? It's either going to come back down to this level here and then move on its way further up, or we were going to actually make the move to actually test this level. And you'll notice that the market always wants to test the level it broke at some point. And whilst doing that, I identified that we had an advanced pattern set up here. Price moves back down, touches the 38.2 retracement. That's the Fibonacci ratio we need for the Cypher pattern. And then we need to grab our Fibonacci extension tool again. swing low to swing high, and we're looking for the 127 extension, which comes in right there. Perfect. That's the second ratio needed for the Cypher pattern. And then we're going to need to see the 78.6 Fibonacci retracement level hit for the decompletion of the Cypher pattern. So now not only do I have the structure levels that have been tested, previous support breaks down, now becomes resistance, resistance, resistance. We break above, we're waiting for a move back down. So if I move to the far right edge of the screen a little bit, fill in our Cypher pattern. Cypher pattern completing down at the 78.6 right there. We move on, see if we get filled. Being patient, we didn't quite get it there. The market looks like it's moving back up. Boom, there we had it. That was actually a news candle that did that, drove the market down, pipped us in. Orders were front run by a few pips, pipped us in and shot straight back up for target 1s and target 2s. And as this is a trend continuation play, as we've already identified, we've broken the structure level. We're waiting for a move back down for the market to move back on its way in a trend continuation. Entry technique is the pattern, coupled with the structure, reading the market, how it moves. So powerful. So powerful. And this is a perfect example of how combining all that together, using the pattern as the entry technique, you can use your pattern targets still, but you can also look for extended targets. You can also look for your targets at a test of this structure level up here, or you can look for further targets, perhaps up here at this structure level. Or you can get a Fibonacci extension from swing low to swing high here, or swing low to swing high there. However you want to do it, however you use these tools that are in your toolbox to predict where the market may get to. Well, I hope this was a good lesson and how you can combine the two things together, patterns and entry techniques, along with the structure and reading the market. And you can go away and practice on the chart, check it out, go over the video again, just put it on repeat if there's pieces you miss or not understand. Go through the previous two videos that I've done. I've done one on a pattern that I entered late. I've done a previous video on reading a price chart. I'll be coming with a video on Fibonacci as well. Yeah, like I say, so I hope you enjoyed it. Go away and practice and have a great week in the markets.